This is the performance summary for the weekly reversion strategy for week ending March 20th. Let's start by inputting the current balance in the account. So last week was practically flat. I made $12, which is a percentage gain of 0.04%. And these were the 5 positions held in the portfolio, and they were each allocated around 10%, which is half strength. And the strategy has determined that the equity markets, the US equity markets, are in a bear market condition. And when that happens, it goes 50% allocation across the board. So the first one was AMD. That was the best trade of the week, up 3.26%. And that's how the trade looks. So we bought the dip from the prior history. So we entered here on Monday morning and sold here on Friday's close for a profit. Next one is Fedex, FDX, up 1%. So we got in here Monday after the prior weakness, and Friday there was a big pop after earnings, but it came down towards the end of the session. So we exited here for a 1% gain. Next one was GE, down 5.6%. And that one's been weak over the past several weeks. So we got in here and it never recovered. So we lost money there. Next one is General Motors, down 0.7%. And we entered here, exited here on Friday. Last one is Goldman Sachs, up 2.7%. So we bought this dip, got in here, and got out here for a profit. And let's input the current balance into the cumulative tab. So this is how the equity curve is looking since the inception of the strategy in 2024. And let's also look at the long-term performance. Here's the back test going from 1994 to present date. And over that time frame, strategy has an annualized return of 20% compared to 8.5% for the S&P 500 benchmark. And year to date, the strategy is up 4.8%. And this is how the equity curve looks compared to the benchmark, which is the gray line. So if you're interested in learning more about weekly reversion, or you'd like to sign up for my Signal service, where I email you the stock picks into your email inbox on a weekly basis, please visit my website at returnstream.com. Link is below. Thank you.